Welcome to Blockchain Unpacked. Blockchain Unpacked is a videocast and podcast series held in partnership between RegTech Associates and Crystal Blockchain. Join Jason Boud and Marina Kaustova every month and explore the real-world impact of criminal activity beyond the blockchain. During the series, we will introduce you to a range of experts who will help analyze regulatory effectiveness and share the latest news, trends and predictions in a digestible format to keep you in the know.
Hello, I'm Marina Kaustova and welcome to Blockchain Unpacked. This show features expert insights from prominent leaders in blockchain, regulatory and technology industries. And I'm delighted to be co-hosting this new show with Jason Boud, CEO of RegTech Associates. Jason and I will kick off by covering some of the developments in Web3 space that caught our eye in the past few weeks. And then we'll be joined by this week's special guest, Jonathan Dixon, Director of Regulatory Affairs at Eventus for EMEA. And he will dig into some of these topics and provide insight that you'll struggle to find anywhere else. So without further ado, Jason, how are you? How are you doing? We've been recording last episode a few weeks ago. So what's been going in your world since then?
Hey, thanks, Marina. It's really good to see you again. I know how super busy you've been. April's been a really busy time at RegTech Associates. We've been doing lots of research and writing in a couple of areas recently. The first being market surveillance, and then secondly, AI. And if I start quickly on the AI side, we've been looking at AI regulations and their impact over the coming year or 2 years. And obviously, you'd have to be, hiding in a cave somewhere to not notice how much noise there is about artificial general intelligence, or AGI, as it's known, and also large language models, or LLMs. And everyone talks about ChatGPT, but we've been actually looking at the likely impact of the AI regulations as they come into force in 2024. So that's the first area we've been really busy with.
All right. Yeah, that's definitely a very hot topic now. I see many startups, emerging right now. A lot of interest coming from the investors, particularly because there is a lot of funding available right now for the seed funding, for the Series A funding. And it's perfect, for these kind of businesses, as we all know. So yeah, understandably, that's a super hot topic right now.
Yeah, absolutely. The second area we've been looking at, which is connected, I think everything's almost connected to AI these days, but is on the market surveillance side. So, we've covered this actually, Marina, a couple of times, right? We covered it in our first chat and a little bit last time we recorded, but there's lots of evidence pointing in crypto markets, mirroring the market abuse behaviors in traditional finance markets. And, no one should be surprised if we use terms like pump and dump, or layering, or spoofing, or front running. It shouldn't be unfamiliar to people. And what we've been working on is the looking at the technology that's used to detect this behavior. So how do you monitor trade-based data, but also how you communicate the communication data surrounding that misbehavior? So, Telegram, WhatsApp, Discord, email, etc. And last week in London, we hosted 25 leaders of market surveillance functions in leading financial organizations to discuss this very topic connected into AI. So how do the new systems that are around start to use general AI technology to help with market abuse? So yeah, super interesting conversations.
Yeah, we see a lot of talks and also from our customers and from big financial institutions about they all seem to be very much engaged in the process of brainstorming about how the final products could look like. And I would say that, particularly, cross-referencing latest developments in AI with what's required right now, what's expected right now for the cryptocurrency regulation creates an additional, these cross-section of the, also most hot topics right now, most hot industries right now. So yeah, I believe that's that's the future of the innovation for the compliance. Definitely, with crypto, when crypto emerged, it provides so much, more data, so much more fields and opportunities for compliance to develop, and introduce new techniques for understanding the money laundering techniques. But now with AI, it seems it moves even further. So yeah, great to see that, and super excited to also like understand, how what kind of new vendors or what kind of new products could emerge from that. Yeah.
Yeah, we've actually got a bit of research coming out between now and when we do the next recording, looking at the whole conduct risk technology space. And, we're seeing quite a lot of changes there with incumbent technology vendors buying some of the new native AI startups. And it's pretty interesting. We've got Eventus on the show today. Eventus are a bit of a crossover. They cover traditional asset classes and the new, if you like, digital asset classes. So it's a bit of serendipity that we've been working on that, but also we've got Jonathan on the show. So I'm super excited to hear what he's got to say.
Yeah, definitely. Looking forward to this conversation and hearing more insight from you.
So Marina, you're a really busy lady. You're all around the world. Tell me, in the last month, if you can fit it into a few minutes, anyway, what's been the most exciting things you've been involved in?
Oh, I'll try to. Yeah, last weeks were super busy for us. It's a hot time because of the general like instability of the market, and it translates very easily to all our customers being worried or being about what's going on and asking for more clarity, more support in these times. It was very, very busy also like on the product development side for us, as we were releasing hundreds of new cryptocurrencies as of lately. So it's a big time. But last week was particularly crazy. I started that week at Europol, actually. So Europol every year runs a conference devoted to cryptocurrency-related crime, where they try to connect law enforcement officers with the private companies dealing with digital assets on a day-to-day basis, particularly like exchanges and blockchain analytics companies as well. So it has been running for 7 years already in a row. And yeah, we are participating for a while already in this conference. And it's always a great opportunity for us to, understand how what we do actually is being applied against the ongoing crime, and to understand, how this is changing year to year. Because of course, we are dealing with this data and we're providing information about crimes associated with digital assets. We're using digital assets, but this information gets to us only, it has been processed by law enforcement. And here we had an opportunity to, to hear about this experience like firsthand. So yeah, it was a great moment to be there and to understand, all the latest developments. It's not a secret, again, that while the markets might be in any kind of turbulence, or there might be like a crypto winter or not. Again, scammers are not, they do not pause at any moment. Like us working like 24 hours on developing anti-money laundering products, they are devoting 24 hours, for 7 to evolve, their techniques to somehow trick, people and design their schemes and methods. So yeah, it was super exciting.
Great. I've got a quick question on that actually, because in the last show you mentioned the pig butchering scam, right? And
Yes.
On mainstream TV in the UK, there was a whole show about that, a sort of investigative show, which was really interesting. I hadn't realised how complex and sophisticated those scams are. I know we touched on it briefly last time, but I had a question about the Europol conference. So how open are, if you like, the discussions about, obviously they don't talk about active investigations, but is there much discussion around, almost like typologies of crime or scams? Is there, what's the sort of format, and how does that conference work, and how open is it, I guess, are my questions.
Well, we have, of course, like there is a part of this conference where we are allowed to have direct communication to the law enforcement, and by saying we, I mean companies who are dealing with the digital assets or analyzing digital assets. So cryptocurrency exchanges, blockchain analytics tools, and even protocols. They are actually reviewing and explaining how they are working internally, and what they see, what kind of experience do they have on their side. Because every cryptocurrency exchange right now, they have their own investigation team nowadays, and it's a normal practice that is being adopted. And it's very frequent that they are hiring people directly from law enforcement to these units, actually to be able to assist with all these investigations or with all these cases as fast as possible. Again, in order to provide the best customer experience, right? To provide best customer protection. Yeah, so it's a very natural, conversation where actually investigative teams of cryptocurrency exchanges or even protocols are talking to investigative teams who are supporting these whole cases from the law enforcement side. So yeah, it's investigators talking to investigators, always very, very, very interesting. And yeah, peak butchering is a big problem right now. There are several others, but I think this one, it has been rolling on for a while right now, and just recently started picking up in media finally, which is super good. I really think that education is a key component of prevention of crimes and scams, particularly scams and Ponzi schemes. The earlier people are aware about the typology of the scams, about new things emerging, the easier then it is for all of us to stop these kind of things and to actually move against that.
Yeah, 100%. It sounds like a really interesting opportunity to discuss with clients and also the industry, to make sure you've got the best product on the market and, as alongside the other vendors that are helping fight this crime. So yeah, fantastic.
Yeah, no, true. There also calls, for a lot of collaboration. And that's also the point that I'm making on, these during these opportunities to speak, along with our competitors in this space, that, whenever we are finding, certain crime happening, or we are in a possession of certain evidence about some massive, scam unfolding, it does make sense for us to make it available, to everyone in the market, just to stop this thing from going forward. And there are a lot of conversations about, how these collaboration efforts actually could be structured or evolved further. But I believe in that a lot. Yeah.
Yeah, awesome. And you may have been somewhere else recently as well.
Oh yeah. I jumped on the plane, arrived in Austin. So last week it was Consensus Week. So Consensus is, I think, it's the most crypto conference that exists in the world. They've been previously running it in New York. Last 2 years, it's happening in Austin, Texas. And yeah, I've been visiting Consensus since 2015. And to me, it was always like a new year, your whole year revolves around this point where you meet with the most prominent leaders of this space. You understand, how the industry is evolving, where it's going. So yeah, it was important for us. I was visiting Consensus with our team. And yeah, it was different this year than the last year. I'd say last year it was I mean, people were expecting the crypto winter should happen any moment now, or there were already signs of that, but it wasn't in full, scale. So this year it was visible, that it is actually happening. So there were less people, less, I think, even participants, but the quality of the conversations, it was outstanding, and I loved it absolutely. Something that I saw already, which echoes a little bit to our discussions during the last episode that we recorded, is that many companies that were operating globally right now, it's visible that they are deprioritizing U.S. market. If they were looking previously for financial institutions to get more customers from this sector, it is quite visible that right now they would be reallocating these resources to get more focus or more attention to, for example, APAC region or MENA region. So particularly, yeah, at Consensus it was quite you could see it, you could sense it. Yeah, but overall, very nice. Again, that's a great place to feel the pulse of the industry, I'd say.
Yeah, fantastic. I know a lot of people that were there, and it's sort of interesting that your comment about potentially firms deprioritizing the US market. Obviously, we covered the US market a lot last time, and there's been some pretty big news in the EU, right, over the past couple of weeks that we're going to touch on in the show as well. So, yeah, really good to hear, almost like the mood music from a couple of different conferences across either side of the Atlantic.
Mm-hmm. Yeah, that is true. I mean, a lot of conversations that I was in were about, if you're staying in the United States, how not to get sued, and if you're moving out, where do you go? Are you going to like MENA region, who is very actively, also working on their like updated legislation? Are you going to APAC region, which is also booming right now? I have seen news that Upbit Korean exchanges surpasses Coinbase by its trading volumes recently after years of like cryptocurrency ban in Korea. That's super surprising to see right now. So APAC region is really like ramps up, but also of course Europe and MiCA. It's a like huge development, and this clarity and this unified approach across many countries, combined with the special conditions offered by some countries like Portugal a while ago, right now in action. I mean, that also creates, that also makes Europe very valid and attractive destination for the companies who are seeking, where to move the headquarters, or they're establishing new business, where to launch the business.
Yeah, I think that's a really good segue to maybe dive into some of the detail on MiCA as well. I'm a big fan of of understanding the regulations and where they came from. And I know you're going to give us a little brief sort of potted history of what led to the MiCA regulations. But yeah, I mean, that conversation, I think in my world, in the EU, has been dominated by those regulations and the MiCA regulations and what we can expect from now. So for the benefit of our listeners, Marina, should we have a little chat about the brief sort of history of MiCA and why it's so significant in the industry? And then that's a great segue in a few minutes time as well to let Jonathan into the episode.
Absolutely, yeah. Happy to give this overview for anyone not familiar on how this has been developing. So, well, the European regulation has its own history, and I think it all started in 2013 when EBA first published a warning about the cryptocurrencies. So it was early days, but even then they had people they were working in particularly analyzing this space. 3 years have passed since 2013 until the next big move from European regulators, and ECB actually published their analysis of the way cryptocurrencies have been working. And again, they were mentioning and particularly addressing the risks associated with the cryptocurrencies and digital assets. So in the following years, of course, we saw a boom of the ICOs, and European regulators started like, of course, they were always like mentioning the risks associated with that, but they also started growing more and more into the idea of, adopting the framework or understanding, how that could be integrated into the legislation that was already in place. And I think until this year, what we saw is European countries regulating cryptocurrencies, each under their own approach, sharing, of course, the benchmarks, sharing best practices, always following, of course, FATF guidance, which was updated every year since 2019. But anyway, there were differences, right, in that, which led to a kind of a regulatory arbitrage. So in 2020, European Commission first proposed, the concept of MiCA. MiCA is Markets in Crypto Assets Regulation. So after 3 years, it was finally adopted on 20th of April. So what MiCA particularly covers are 3 areas related to cryptocurrencies. So first of all, token issuance and everything related to that. So that's a big topic, and I think it has many sections in this document related to that. The second part is the licensing of the services that are related to cryptocurrencies. And the third big topic is the market manipulation restrictions, which has been, of course, a big problem, looking back, and still is. And I think here they also try to, again, apply the existing restrictions for traditional markets to cryptocurrency and normalize that a little bit. So yeah, well, MiCA will be fully come to the enforced state at November, with parts of that becoming enforced since starting July next year. Yeah, and I think until November or until July, regulators will be developing a set of particular requirements and guidances on how the white paper should be structured, how the token issues should be operating. So we will be seeing more and more documentation coming this way. Yeah, and I'm thinking,
Yeah.
yeah.
Just a quick comment on that. I
Yeah.
mean, I mean, it's a really big topic. We'll get into some more of the detail, but I like looking back in history to see where regulations come from and how effective they're going to be moving forward. And I think you talked about comparing it previously to GDPR. I think a little bit about MiFID. So the regulations, the MiFID regulations that exist, and the EU sort of operates on this. Sometimes fairly slow cadence, but actually, the history shows that they get the regulations there eventually, right? Both with MiFID in the financial markets now in its second iteration, and privacy regs like GDPR, and they'll get there. I think the other thing that happened at the same time, which has almost gone under the radar, is the travel rule regulations, or came in at the same time, right, or went through the same process. So that's going to be interesting to maybe touch on in another episode, because I think token issuance, licensing, and market manipulation is quite a lot to touch in one episode.
True. Sorry, it's and again, MiCA is not complete as it is. We are to see, a lot of other documents and guidelines, particularly regarding DeFi, and some categories of the tokens are actually not covered by MiCA, which has been highlighted by many market participants. So there are going to be a lot of new topics also that will be covered, by additional regulation. But as a first step, I think it's something that everyone has been waiting for a very long time.
Yeah, 100%. Should we anything else to cover quickly, Marina, or should we get Jonathan?
No, I think I'm actually super eager to hear Jonathan's view on all of that. So I think let's invite Jonathan.
Okay, Jonathan, while we wait for you to join us on stage, let me remind the listeners of Jonathan's background. So Jonathan brings nearly 2 decades of experience in financial services firms and more than 9 years experience in working in trade surveillance. He's currently the Director of Regulatory Affairs for EMEA at Eventus, who are a provider of trade surveillance and risk monitoring technology. Jonathan works with his clients and industry bodies to champion regulatory effectiveness and protect them from market misconduct. And Jonathan, your experience includes working with tier 1 banks, consultancies, and most recently serving as Kraken's head of surveillance. So welcome to the show.
Thank you very much. It's a pleasure to be here, Jason, and thank you very much for inviting me. It's a real nice opportunity to talk about MiCA and talk about my background and talk about the current pressures on the industry. So thank you, Jason, and thank you, Marina.
Yeah, John, it's great to have you with us today. So for such an exciting conversation, and I'm happy to hear your perspective. But what you've been up to for the last week, what's going on in your world, since we're sharing, our views on that.
Yeah, so Eventus had a London client forum at the end of last week, which was my first opportunity to really get my face and my name out there a little bit. I joined in the end of February. So it's been a fun chance to get my name out there. We were talking about MiCA, actually, and I was told off by accidentally saying MiCA at the very beginning. And one of my European colleagues in there swiftly fell on me and said, Jonathan, it's MiCA. We have to say MiCA in the same way we say MiFID. And I realized my error before my words came out my mouth, but wasn't able to stop myself. But what we were talking about more generally were, will the rest of the world be following Europe? So where Europe leads, will the rest of the world follow? The segue between the events of MiCA, particularly on CASPs or crypto asset service providers, and what's happening in the UK at the moment with the HMT Treasury consultation paper, who I believe finished their consultation period on Sunday, so just before the weekend ended. I'm just trying to see whether or not we're going to see a degree of correlation between where the regulators are really putting their efforts and on protecting retail. So it's been interesting a couple of weeks, especially with MiCA being voted on and the HMT consultation paper ending, and then my first foray into public speaking for Eventus. So you are my second attempt. So I've got no excuses for getting anything wrong with you guys. I've had my first shot already. So thank you.
No, awesome. It's really good. Obviously, people should realise that the UK is not part of the EU from a legal and regulatory perspective, and so the HMT consultation that you spoke about is, part of the UK's response. And I guess the pressure will be on the UK. I'm just maybe going off script a little bit, but interesting to hear your thoughts on how they're getting on, the UK government.
So I've really been focusing on the trade surveillance part of it, given that that's my last 9 years, and also where I really work most heavily with Eventus and Eventus, our product as well. From my perspective, there's a great degree of correlation between what we see in MA and what we see with the efforts for the consultation paper, which is good because we should understand the rules that exist in the market abuse regulations and regime. We should know what the efforts need to be in terms of risk assessments and prioritizing what you need to look for and how you need to deal with it. I think there is a degree of consternation amongst the industry about due process. So one of the things that came out from the HMT paper was talking about CASPs or exchanges maintaining blacklists of clients that they have proposed have been found to be in breach of MA or market manipulation or insider dealing rules. And I think the concern is that at the moment we submit stores in traditional finance to the FCA. The FCA may or may not enforce, and once you've been enforced, there may then be punishments that are meted out to you. I think stating that crypto exchanges need to be the judge, jury, and executioner has concerns regarding due process. I also think there are concerns regarding, not that I would suggest anyone would do this, the ability to impact clients between exchanges for maybe not reasons that we should be seeing. So whilst I would never suggest that crypto exchanges would deliberately torpedo other exchanges, you wouldn't want to see that risk occurring at all. And I think due process is a vital thing to have. So does that make sense as the area of concern that I see and where we should be focusing on?
Yeah, I'm really interested in that whole, I suppose putting the initiatives back on the CASPs and the exchanges to act as judge, jury, and executioner, as you say. And the other thing it leads me to think about is the exchange of information. So if an exchange or a CASP decides to not do business with a market participant for reasons they suspect to be nefarious, then what obligation, apart from sharing, it's natural to share that through a store with a regulator, but is there an expectation that information shared elsewhere, which would potentially lead to concerns around conduct, across the industry, and also privacy concerns, right? So I don't know enough about the detail, but my synapses are firing off in a few different places where that might be of concern for me.
Yeah, no, I would completely agree, especially regarding privacy. I think an awful lot of the crypto environment and the way crypto firms are set up is to focus on privacy as a major component of how people transact and how people operate. And this is even on CeFi before we even get into DeFi, which is obviously out of scope for the consultation paper and out of scope for MiCA as well. So I, on a personal level, I fall down on the understanding that due process is a good thing. But for crypto exchanges and also for technology vendors, it's about getting to that risk quicker and understanding that risk. So I think it's important to make a distinction between what we should be doing as providers of regulatory solutions and also for exchanges, which is get to your risk, understand your risk via risk assessments, via understanding how your clients operate, whether that's AML, KYC, or just doing your surveillance for trade surveillance. And then understanding that we think the regulators have a part to play as well in making sure the environment is safe and secure for all participants, and keeping a degree of consistency between TradFi and crypto assets as well. I think a degree of understanding your risk is great and important, but also making sure the regulator does their job as well.
So Jonathan, since the first time we've met, what's really struck me is that you bring a really unique perspective to this topic, having had experience in financial institutions, tier one financial providers, but also at exchanges, Kraken in your case, and now a technology provider. So can you tell us a little bit more about what MiCA means in terms of relation to KYC and AML obligations?
Yeah, thank you, Jason. Good question. I think it's important to first of all reference that this really touches on something that Marina mentioned at the beginning, which is the three separate areas that the MiCA really hits on. And the first one of those is registration and authorization, in that CASPs and crypto exchanges are going to be required to ensure that they have AML and KYC processes that meet the requirements of MiCA if they want to operate in the EU. So it's going to be a need to have, not a nice to have. Secondly, they're going to have to do their identification and verification. Now, I'm a member of a couple of crypto exchanges due to some of the giveaways they've had and the fact I worked at Kraken. And I'll tell you, it's not a new thing that most big exchanges should be doing tiered verification. It should be something that they do. They should have teams that deal with it. But it will be a must-have from now on, which is a big thing. The third point I would say are risk assessments. So they need to understand and really get to the bottom what their risks are for AML. I'm not going to say what those should be. That will obviously be dependent upon each individual CASP. But it's important to recognize that they'll have to understand their risk and document that. And lastly, record keeping. So like MiFID II, making sure you know what your records are with your clients, making sure you know their transactions, making sure it's logged. So I would say those are the four main things. It's a must-have due to the authorization processes that will be required, the identification and verification, understanding your risk, and lastly, the record keeping. So big thing.
Oh, yeah, and I can see actually many companies already, started like preparation for this big change. Even, we are monitoring the space of the exchanges who have not been deploying, any KYC or AML before. And, they are, of course, like in the hoarding, appropriate categories in the blockchain analytic tools. But, even them are announcing widely right now, May is the time when we're going full KYC, like enough is enough for us. And I'm like, wow, this big move is actually happening now. It's also an interesting question, right now, how their like pre-KYC period will be, comprehended by their counterparties, and all the transactions coming from this space. So, moving to a clean slate maybe is not enough. You need to do something also with your history should be taken into consideration as well.
One of the things that interests me here, like you, Jonathan, I've got a couple of accounts here and there at different exchanges, and in general, they do some level of checks, and it's risk-based to the extent that if you trade in one product, you may need a check, etc. I'm really interested in the ones that haven't adopted that, right? What they're going to do with their customer base. Is they going to force them to re-enroll? Are they going to change their terms and conditions? Right? I've no idea what the answer is. I guess they have to become compliant. So ultimately, you'll have to go through identity verification and onboarding checks. Otherwise, those, regardless of your state, when you became a customer at a cutoff date, you'll have to go through that. So it's really interested to see what happens with customer volumes, right? And account volumes as organizations go through that.
I think what we might see is a consolidation of players in the environment. I think we might well see a reduction in the number of CASPs that will be operating. I think it'll be survival of the fittest and survival of the best, really. That you look at the big firms like your Krakens, for example, that do have these processes already built in. And you'll find clients migrating to those exchanges that will meet these requirements or have to in order to still be compliant and operate within the EU. So I think if firms lack the funds to do their KYC, they're probably lacking the funds to do business at the cost of doing business, right? So if you can't afford to do trade surveillance and you go, I don't think it's going to happen on my platform, I'm not concerned about it. If you can't afford to do what's regulatory required, then you can't afford to operate. And I think smaller firms might maybe be pushed out, or they might have to mature and make sure they are ready. And one of those two things will happen. It'll either be they're pushed out, which means we're getting rid of bad actors and opportunities for people to maybe launder money or do things they shouldn't do. Alternatively, we'll see people move towards exchanges that can allow you to operate in a fair and secure manner.
On that, I mean, how do you think, Jonathan, MiCA is likely to improve investor protection? And, you know, what's your view on the increased effectiveness of things like trade surveillance if all the actors are identified and known now? Where do you think we're going in that topic?
Yes, I think there are two important things to consider here, and they're almost not quite diametrically opposed, but they are a little different. Firstly is investor protection. I'll get on to the sexy, exciting bit that I love and my company loves as well, and just after that. But for investor protection, I think there are probably two main things that I would talk about. The first one is investor categorization. So making sure that you understand how much knowledge your retail clients have. Are they sophisticated investors that understand derivatives? Are they just people that want to trade spot up to a certain level? Making sure that we understand that retail clients should only be exposed to products that they really do understand. And the third bit, or the second bit that's really important, are custody requirements. So ensuring that client assets are held in segregated accounts is a huge thing for retail protection. I can't get over how big that is. I won't mention firms that may not have done it or difficulties that we've seen, but ensuring there is segregation of client accounts is of vital importance to ensure that the industry matures and is seen to mature, and that there is protection for client funds and client assets in general. So those are the two big things I would talk about in terms of investor protection. When it comes to trade surveillance is an interesting place in that invariably it happens post-event. You're looking at events that have already occurred. What you need to do is understand your risk, and I say this a lot, but firms need to understand where their risk lies and get to that risk quicker. So one of the things that Eventus does, and I won't go on too long about it, is cast a wide net for alerts, but then apply robotic process automation. So not AI that you were chatting about before, more like machine learning, to make sure analysts can really focus on high quality, high level alerts. And this is where I think the industry needs to get to in terms of not necessarily using Eventus to do it, but making sure analysts spend their time looking at these high quality alerts rather than incredible volumes of low quality alerts. And I think once that happens, we'll see a consolidation of factors, and those factors will be understanding the risk. It'll be understanding the types of manipulation strategies that occur. I think there's a great degree of similarity between what we see for TradFi and what we can see for crypto assets. I think there's a strong correlation between what you can see for less liquid penny stocks, if you would, or the alternative investment market in the UK, and less liquid crypto assets. I mean, realistically, is someone going to spoof and layer a Bitcoin the same way someone probably wouldn't spoof and layer Google stock? Unlikely to happen. But if someone wants to spoof and layer Jonathan coin that trades at 36 cents a coin, could have. But for full disclosure, Jonathan coin is my make-believe personal coin that everyone there is no Jonathan coin that I'm aware of. It's less likely to happen. It's more likely to happen. So it's about understanding your risk, understanding where that lies, and allowing your analysts to focus in on that risk quicker is where I see the real benefits for trade surveillance. I know it's a long-winded answer, so apologies, but I get very excited about trade surveillance, so I am prone to going off on the soliloquy. So thank you.
Do you see like these shift, from dealing with something that already has happened, the crimes that already has happened, analyzing them, to like prediction models? Is it like likely to start happening in 2023, or you think it's going to be, some time until the industry realizes what you actually need to do for that?
I think if you can't punish people for thinking about something. Invariably you can't. You can't also punish clients at the same level until they've transacted. And this probably ties in quite neatly with what I was talking about before in terms of due process. I think prediction modeling works for some things. I think with AML and KYC, again, until you've laundered the money, until it's been smurfed or structured, until it's been off-ramped, a crime might be planned but hasn't yet been committed. And I would say pump and dump and those sorts of activities are similar. I think where you might have some value here is where you start looking at the onboarding process for new digital assets. So new digital assets, there needs to be a firm process and procedure in place to ensure that when your CASPs and your exchanges look at what new asset they're going to onboard, do they understand it? Do they understand the risks? So the Squid game token that was released, I believe, in 2021, 2022, was a good example of firms not doing their KYC. I think it was DeFi not doing their KYC on the token. So this token only went up in price. It didn't really drop. And the reason for that was you could buy the token, but if you wanted to sell it, you had to own a certain number of another related token that was only really owned by the investors and the people involved in the pump and dump scam. Now, this meant that people could buy it. The price went up. People saw a continuously rising market. It pumped from cents to thousands of dollars. The investment team that created the coin then sold out. The price tanked, and no one had the opportunity to get any of their funds out. And this is a really, really, really good example of how coin listing teams have to do their KYC. And this is how you do your preventative analytics, by understanding the risk of the token. Realistically, can you stop someone pumping a make-believe coin like Jonathan coin? But can you stop someone pumping a coin that's illiquid? It's very hard to do, in the same way that you can't stop the GameStop tokens for the GameStop stocks from being pumped by collaborative efforts on Reddit. It's very hard to prevent this. But what you can do is understand the risk and try and prevent it once it's occurring. Maybe put a stop on trading or understand why these events are occurring. Does that make sense as a way of understanding the risk?
Yeah, it does. I mean, one comment I had as well is, okay, so, we've touched on token issuance, right? And the due diligence there around token issuance onto an exchange. And maybe you can't catch all of the bad actors that are issuing tokens that investors can invest in. However, you might be able to put some regulatory controls in to prevent certain activities in the market. So, for example, if the behavior is that a token's only ever bought and it's never sold, can the regulators go as regulations and the exchanges, the issuers of those tokens, go as far as saying, okay, we're going to stop that token sale on the market because it's exhibiting these behaviors? I don't know, but that would seem to be a logical place where you could put a control in place, like deposits in a bank, as an example.
I think there needs to be due diligence on smart contracts and a better understanding of smart contracts. It's all still quite nascent, and I think there needs to be a further evolution of what the regulators are looking for and how we're looking for it. I wouldn't go so far as for me to propose what the regulators should do. I think there should be an onus on ensuring that when CASPs list tokens or assets, they understand the risks that these propose to investors. I think that's key. Not to say they shoulder the burden or blame for when things go wrong, but there should be an understanding of what the white papers are, what the risks are, and how the smart contracts operate before anything is listed. And that process needs to be thorough.
So we're almost up at time. So we're going to go, I think, to one final question, and then we'll wrap up the recording. And it's time always flies by on these recordings. So I think probably the final question is around, from the perspective of your companies, right? What do you think MiCA and the ongoing regulatory, increases and improvements in digital assets, what do you think it's going to mean for technology firms like Eventus and Crystal? Good times ahead, bad times ahead. Give us your predictions. Marina, you go first.
Well, for last years, we have been thinking about how do we serve the global variety of our customers, and many of them had, different jurisdictions, and that meant different requirements to, what they were deploying. At some point, about like a couple of years ago, we started thinking about how do we implement some functionality that goes beyond the existing requirements, and we start looking in the future and thinking about what comes next. And of course, the unified regulation is what we all have been asking for and what we were looking forward. So we had to think about what unifies them, what might be like similar between them. And of course, FATF guidance served a great role in all of that. So I'd say that for us, it's a bit of a relief right now. There are still situations where we have like contradictory requirements from some of our customers. So say my favorite example are like Maltese customers and APAC customers thinking differently about like gambling operations and everything related to gambling right now. But at least within Europe, I can see these these uptick in interest again how the AML should be structured, related to cryptocurrencies, and how people should be trained, and how to have like correct teams, operating there. But also, I think that these requirements, in general, what MiCA sets up, it will be also one way or another deployed, in other countries as well, or at least taken as an example. So yeah, I think we have seen these before. Also in the countries, for example, who are not members of the FATF, they were always reading and following, whatever the FATF published in their guidance. So yeah, I can see these big moves are happening right now. It's definitely good for us. It's a little bit simplifies, the way we look at these aggregations of customers being placed in certain locations. So we see a lot of work in front of us, and also like on the training side, because of course, as Jonathan rightfully mentioned, if you don't devote time and attention to KYC, you are not doing your business correctly yet. So I think our customers understand that. We have to support them.
From my perspective, and thank you for the question, I think it's important to note that we as in Eventus and the regulatory solutions environment is going to become a cost of doing business. It's not going to be a nice to have, in that you can cut your surveillance team and not run a surveillance team. You're going to be required to have one in order to operate within Europe. And I think that's a big thing, especially when you look at global order books as well. This is going to end up becoming global order book surveillance, which can only be positive for clients, can only be positive for retail participants, and even institutional participants as well.
Thank you so much, Jonathan, for joining us on this show, and we hope you really enjoyed it. We hope our listeners will join, for our next episode to hear more about the regulations and the technology. And yeah, thank you, Jason, for being such an amazing co-host.
No problem. Likewise, I'm really excited. Just a little plug for the next show as well. We've got the head of financial crime from BCB Group on the next show, so please listen in. And again, thanks for joining, and thank you, Jonathan. Bye for now.
Thank you.
Bye.